Hey, folks, welcome to InTheMoneyStocks.com's intraday analysis video, brought to you by the creators of proprietary price, pattern, and time methodology. Learn the PPT strategies and profit for life. Let's get into the market action today. All right, first of all, Tuesday, January 28th, 2014. It's just a few minutes past 1:30 p.m. Eastern Time. The markets are trading higher really across the board, although the Nasdaq is lagging because of Apple. And again, just to recap here, Apple had some pretty ugly results yesterday. It was really the guidance that was poor for Apple, which took the stock price down. And again, right now, Apple's down about 8% or $43 after hours. I was a little surprised at this because based on the chart, it looked decent to the upside in yesterday's video. I discussed that. But in reality, as I said, you just never know with earnings. It's always a gamble. It's a 50-50, and that's why I never invest prior to earnings. Just not worth it at all. All right now, S&P's up 9 points, Dow's up 86, and again, Nasdaq up about 2 points on the day. Now, I called a perfect level yesterday, the 1775 S&P level, which again on the SPY was 177.50. I've talked about this level literally in this video to our members as well in a nightly video that goes just out to them, and I've talked about that for about 3 months to 4 months time. Sure enough, we came right down there and the markets did bounce. And this is the most amazing thing, and this is what I want every one of you to impress upon or understand. The levels are bigger than anything else out there. All right, news doesn't matter. All that matters are the charts. And a good example of this would be take a look at Apple, right? So yesterday after hours, Apple's getting crushed. The spiders, the futures are trading down quite a bit. But does it matter? No, because the level was tagged and the markets based on that level should bounce. What does the market do? It bounces. Even this morning, the durable goods orders came out. Horrible durable goods orders. Markets initially sold off. Futures went back to the flat line where we weren't even up. Yet again, market opens today and pushes up. And now why? Why today? I mean, if you look at last week, we didn't have bad earnings from Apple. We didn't have bad durable goods numbers. We had some issues overseas, sure, but why have those issues all of a sudden vanished and this news doesn't mean anything? Ask yourself that question. It's a very important question. And the answer you'll come back with is there's no other answer than the charts. And that's why here at In the Money Stocks, we just simply look at the charts. And to just show you another example of this, take a look at ANF. All right, I told you in yesterday's video that we bought it as a swing trade, and today we sold it. I repeat, we sold ANF, Abercrombie & Fitch, for a $2.30 profit in 1 day per share. All right, every share up $2.30. Unbelievable profit here in just 1 day. Why? Because the chart was primed. Gap up here is a bullish move. Consolidation inside bar, perfect angle into dual moving averages. You expect to pop off of it. Did I worry that the markets were weak when I bought this? Nope, not at all, because the chart's telling me. Plus, we hit the key level on the S&P 500, so I knew the markets were going to bounce anyways. All right, so again, literally in 1 day, ANF from our buy entry up $2.30. Bam, sold it, booked it, 7% profit. Just like that in 1 day. Just imagine if you even had 1,000 shares, just 1,000 shares of ANF, $2,300 profit in 1 day. I mean, that is sick, folks. And that's what we did here at InTheMoneyStocks.com. And that's what we've done all year. That's what we did last year. Again, last year's net returns over 500% in the research center. That's swing trades and investments over 500%. And again, even if you were to only put 10% of your portfolio in each one of our investments, you would have netted over 50% return. 50%. And, you could say, oh, well, the markets were up last year, but we even outpaced that. All right, the average hedge fund last year up less than 10%. We knocked it out of the park, even just 10% of investment in each one, knocked it out of the park for over 50%. This year, in January alone, we're up over 40% already. So, I mean, think about that, just in 1 month, up 40%. And that's when the markets have been basically gone sideways to down. So that's what you got to keep in mind, folks, and that's what it comes down to. But let's go back to the markets here and take a look. Key support right here. Let me just show you this key support. This little pivot high right here, this little pivot low here. That's what you hit yesterday, and that's why you're getting your bounce. You also have these upsloping trend lines, which work as a little bit of extra support. So a couple of the reasons as well why I knew the market would bounce today, as well as most likely be sideways tomorrow and probably get continued bounce after tomorrow for the next few days as well before we see more downside. And the answer is simple. You have the State of the Union tonight. There's no way they were going to let the market collapse today, guys. All right, think logically. You think the president's going to walk out on stage tonight with the market down 300 today? No way. Not going to happen. All right, tomorrow the Federal Reserve. So all these people, again, think about that. They're looking at the Fed, especially after the durable goods orders, and saying, hey, maybe the Fed doesn't taper more. You know, it's basically locked in stone that they've said they're going to taper another 10 billion tomorrow, but because of the poor durable goods orders, the issues overseas, people are saying, hey, maybe they won't taper, or maybe they'll taper 5 billion instead of 10 billion, which would be a very positive thing for the market. The market would rally because it shows the Fed's flexible on tapering. All right, so all these factors just leading to conclude that the market would bounce today and bounce off that 1775 or 177.50 level on the SPY, and sure enough, there it is. So if you know this stuff, if you can read this stuff, you can profit so easily in this market. Doesn't take a genius, I'm telling you. Just have to kind of understand how the charts work and not get caught off guard with emotion. Emotion's your devil. That's what you don't want. If you become emotional, you'll lose. That's why the average investor loses, because they're buying Apple at the highs of 700. They're buying Twitter at $75. When emotion is there, when the media is pumping it, when the institutions are upgrading, they're buying that, and the institutions are saying thank you very much and selling into it. And what am I doing? I'm shorting or selling into it as well, because I know the tricks. And I'm here to tell you the tricks. I'm here to tell you how to avoid getting caught on the wrong side, and that's why we're able to generate these type of profits. So again, folks, that's what you have to do. And again, from everything I'm seeing, we should see continued neutral to positive market action for the next 1 week or so, maybe a little bit less. The markets, in my estimation, have a good chance to bounce up to 181-ish. Right around 181, which is only $2 higher on the SPY, or about 20 more points on the S&P. Once we get up there, then you start to get a little bit on the bearish side again, and you go from there to the downside. All right, the one caveat would be is if by chance on the Fed announcement tomorrow, the markets flush and close below 177.50 on the S&P 500, all right, or 177.75, excuse me, on the S&P, and 177.50 on the SPY. Then you look for confirmation, which is a proprietary signal. If that comes, then the markets are going to go straight down, and you're not even going to get a bounce. But there's most likely about an 80% chance. There's an 80% chance that we continue to bounce for a week. There's only about a 20% chance that the market's flush. Okay, so good stuff right there. You have to kind of keep in mind, and as long as you understand that, you're going to be good to go here. A couple other things to go over. A couple stocks in motion today. Google's having a big bounce back. This stock was down sharply yesterday, rallied back to above the 50. Anytime you see a big fall and a stock pierces a major level like the 50 here, but then closes back above, that's a bullish signal. All right, at least in the short term, it's a bullish signal, and you'll most likely get a bounce, and that's exactly what you're getting today. So watch for that in future charts, because again, that's a very big chart. Because basically what that's telling you is that it was quite a bit below the 50 there, but then buyers, and obviously not little guy buyers, usually large players, were on there in there buying it up and pushing it back up. Technically, emotionally, that's a positive when it closes back above. Investors will see that and say, oh, it closed back above. It's safe still, and they'll buy in, which pushes it up. So you and me have to be ahead of that curve and say, all right, it looks like it's going to close above. Let's take a little position, and then sure enough, it bounces today when all the little guys jump in and push it up and so forth. All right, so again, it's just being, you can't be average. In the market, if you're average, you're giving your money away to institutions and other players. All right, what you need to be is you need to be ahead of the curve. You got to think smartly and logically, not get caught up in emotion. When the market's flush, that's a negative. All right, that's a negative for the average person because they're going to panic. You and I have to be able to see that and say, listen, this is a buying opportunity, and we have to look at it logically and say it's a buying opportunity because A, B, C, and D. All right, does that make sense? Sure. And if it goes against us, we just cut our loss very quickly as soon as we see it's not working. I mean, it's just basics of it. So a couple small losses and a bunch of big gains, and you're off to the races and you're making money. Okay, so just remember that, guys. That's what it's, again, all about, and your little education for the day. Other stocks out there, again, Apple, you can see Apple taking a big hit today. And Apple, even though it was above here, you can see just smoke to the downside. I wouldn't even go near Apple until it gets to about the 480 level, 490 area. Then you might see something of interest. There is some support down there in that lower level. But again, this is some major technical damage on volume on Apple. So we need to, you know, we need to kind of see how things trade out here, and I'd be very cautious. You could get bounces out of it around those levels, but it's not something you're marrying long term. That's, I guess, my point there. Okay, Amazon's up $6. Good job there. Yesterday we covered our short on Amazon, and we covered it right down here. And sure enough, it's bouncing back. I'll look to reshort that when the time is right. If you're a member of the Research Center, you will get the live alert, the text message, the email alert as well that comes along with it, and you'll be set to go. Other than that, I think that's about it, folks. Have a great afternoon, great evening. Come join us here at InTheMoneyStocks.com.